Good afternoon, everybody. I hope you're well. I hope you've enjoyed a little bit of time off over the summer, and that you are now raring to get back to markets in what will be an interesting end to 2023. Good afternoon, everybody. Welcome to ActivTrades Monday Market Matters webinar. It's Paul here. I hope that you can see the charts, or rather the slides to begin with, and I hope I can hear your voice, or rather, more importantly, you can hear mine, because I appreciate we've had the odd one or two audio issues with some of the software over the last few weeks, but hopefully that's now resolved. But if you can hear me, if you can see it, that's fabulous. If you can put that in the chat box, just that you can, that would be a good start for us all. Today, as I said, 4th September, we're here to talk about how to trade pin bar formations. So the interesting thing is that pin bar formations are pretty well known, but not everybody would trade them like myself, and not everybody would, I believe, trade them correctly. So today we're going to do a little bit of a deep dive into just simple pin bar formations, which should hopefully help anyone who is just new to their trading journey just grasp a very, very simple price action setup. But also I'm hoping for those of you joining us today or watching this later on demand on the ActivTrades webinar archive, that you're able to just take one or two elements away to help you in terms of one or two of the sort of more advanced elements that I'll discuss later on in today's session. So what should we talk about today on our agenda? As always, I'll give you a little introduction to Monday Market Matters, and we'll have a look at the news. But not unsurprisingly, as the majority of our session is on the education element today, we'll talk about what is a pin bar, right? How does actually one get formed? Where do they show up, okay, on our charts? And most importantly, how can we use them in our price action trading? And then, as always, towards the end of the session, we'll have a little check-in on live markets. We'll see how those US markets are setting up for the start of the week. And, we'll have a little look and see if there are any particular pin bars of interest that are setting up this afternoon as we get ready for the opening in New York. For those of you who don't know me, my name's Paul. I've traded for a good while, okay? Traded for funds, traded for clients. Primarily, I like to trade FX indices and commodities. And for my trading, as a general rule, I'm a trend trader on sort of longer term trading, and I'm a reversal trader on shorter term intraday trading. And it has to be said that pin bars can be used in both trend trading and reversal trading. And hopefully I'll give you a little bit of insight into that today based upon my own particular experience. As always, when it comes to Monday Market Matters, this is our ActivTrades Monday afternoon webinar series, 2 p.m. London time every Monday. And it's really just about giving us an introduction to the start of the trading week, get ourselves in the right frame as we get ready for the opening of the US markets in about 26 minutes. So we always have a little look at what is the news coming up for the week ahead. Majority of the time we focus on education, just to give you a little bit of insight and trading knowledge that you can take away and utilize in your own trading. We'll always have a little look at some of the tools that are available to you as an ActivTrades client. And as I said, we always have a little look at the live market, start the US session, see how the market is opening up before the majority of the trading takes place. So we always start with a little look at the news. You hear me say this every week for those of you who join us, is that if you're a completely new trader, I don't expect you to be able to analyze the news in terms of understand its implications, but it is very important that you know when the news is coming out, okay? And you can do that with the use of an economic calendar. There is one on the ActivTrades website that you can make available, and there are other ones elsewhere, okay? So there's no real excuse not to check the economic calendar, because it's important to know when that big major news is coming out, because invariably, very often, it is what will induce volatility, okay, into the market. And volatility is very much, I believe, a double-edged sword, okay? When you're on the right side of it, it's fabulous. When you're on the wrong side of it, it can make your trading challenging. So yet, as a new trader, you want to know when those moments are that there will be volatility induced into that market. So we had quite a bit of news coming out at the end of last week. This week is relatively quiet. I say relatively, but it's a case of what we will probably see is there is a bit of news coming out But also what we'll probably find is that there's lots of, let's say, institutional traders starting to return to their desks after their summer holidays, their summer break. So I expect that we will see interesting markets this week as the sort of the men and women on the desks come back and start to analyze what's going on in the news and in the markets, and we start to see what's likely to be the dominant trend or the dominant narrative for the next couple of months. What we have and what we're kind of interested in as traders, yes, Germany's trade balance is due today. We also have Ms. Lagarde, head of the ECB. She's due to be speaking this afternoon, and people will be interested to hear what she has to say. What we have on Tuesday and Wednesday is we have the Royal Bank of Australia meeting, their monetary policy meeting, and the same with the Bank of Canada on Wednesday. In both cases, whilst they are both of importance as news events, most traders and investors are expecting that they will hold their current positions. What will happen is if there is a change to that, that is what would induce the sort of volatility or comments that might sort of differ from the sort of accepted narrative of the moment. But we'll also be interested to see that the US is publishing its trade balance and also its services PMI numbers. Thursday, we see Australian and Chinese trade balance, but we will be interested to see the sort of GDP data out of the EU and Japan, and then on Friday we have Canada releasing its employment data as well. So there will be a bit of news coming out, perhaps not as heavy hitting as at the end of last week, but that's what happens. It's still important for us to know when that news is coming out and to be able to plan and manage risk accordingly. What we want to look at today, what we want to focus on is on trading the pin bar, and understanding the pin bar formations. So I appreciate that not only do we have a diverse geographical crowd who join us for our sessions, and wherever you are in the world, we here at ActivTrades, we hope you're well, we hope you're enjoying these markets in 2023, and we also recognize that not only is there diverse in geography, but we also recognize that the people who join us for our sessions, there'll be some traders just at the start of their journey, others who've been trading for a good while, and hopefully we will sort of be able to provide information and insight that helps everybody in their journey. And when it comes to pin bars are as the slide says, they're a powerful candlestick signal, and they are quite a simple and quite a visual signal as well. And what we talk about it is that not only is it a powerful candlestick signal, but we will very often talk about it as a rejection candle, and that is due to the wicks that are formed. And as you can see there, I'll just bring up the old drawing tool. We see wick rejections are formed by an extreme shift in trader bias and sentiment, and we attribute that wick with volatility and a higher probability of move in the opposite direction. And it's just a higher probability. And what we expect to see is that the market will open here, and then invariably, for whatever reason, price is pushed down during the, let's say, it's a daily candle of the session, until it reaches a level where the bulls wish to step in, and they will step in and they will buy up and force price higher past its open, and in this particular case closes right on its high. And one of the reasons it's called a pin bar is A, it looks like a pin, but B, it's also reflective of the the childhood parable about Pinocchio. For those of you who may remember him from your childhood, Pinocchio was a wooden doll, and whenever he told a lie, his nose would get longer. And the pin bar is a little bit like that, because in many respects, some people might say that the direction of the wick is actually lying. In this case, the wick may be pointing down, but the higher probability is that actually the price will move in the opposite direction. It's not a guarantee. There is no guarantees in trading, but it is of a higher probability. And it's the same with a bearish pin bar, namely, price will have opened here. During that session, prices will have risen for whatever reason, and then also there'll be a point where the bears have stepped in and they've started selling so strongly that invariably it overwhelms the bulls. Price drops down past its opening, and in this particular case closes right on its lows. And so even though the wick is pointing up, the higher probability is of a move to the downside, because what has happened is In that particular case, whilst it might have started off the day with the bulls in control, it's the bears that have stepped in. Okay, the sellers have stepped in and they have wrestled control of the market, and so the higher probability is that price will move to the lower side rather than on the higher side. And us being able to understand that is a simple, useful tool that can help us in our own trading and coming to make our own trading choices. So it is a very popular trading trick because it's very visual. You will see them across all sorts of charts, across all sorts of asset classes, across all sorts of time frames. You will often, even though we'll refer to it as a pin bar, okay, you will often hear it given a multitude of names, things like a high test bar or a low test bar, a rejection candle, or a hammer or shooting star, and there's probably even more names than that. What I would say is that I'm not entirely worried about how you choose to label the candle. Okay, how you label it is is your own choice. The important thing is that you understand what it is and what has occurred to actually form that pin bar. That's the important thing. All right, and a good pin bar should have the open and close within the range of the previous bar. The candle wick should be 2 to 3 times, okay, the length of the body, and normally just like a small body. Now, I will show you later on one or two, I would say caveats to that, or one or two examples where I'm happy to allow a little bit of difference. But when you're starting out on your trading journey, if you can just effectively work out that the open and close is within the range of the previous bar, and the wick is 2 to 3 times the length of the body, that's a good starting point in terms of being able to recognize and identify pin bars. Ideally, we want to see the long nose protruding from all other bars. And as we look at the charts in the moment, you'll see good pin bars, they stick out and they're very, very obvious. And that's what we will notice and see as we go deeper into this session and look at a few examples and a few particular setups. So, as I said, pin bars, they are very popular, many, you might even say they're the most frequent pattern. And they do give a good indication of supply and demand, and they should be clear and easy to see on the charts. Many people will trade them, but perhaps not all like myself. And so in this particular case, hopefully you can see here, that was a very large pin bar that we saw there, okay? But remember, we said the open and the close is within the range of the previous candle. The wick was like about 2 to 3 times the size of the body. It was sticking out from all of the other price action, and it was quite clear and quite obvious. And we can see what happened. Okay, in terms of, just bear with me 1 second. Let's clear this up a little bit. We can see that even though the wick was staying here, we can see that over the next few sessions, price actually rallied much higher, right? And that's what we're particularly looking for and looking how to use them. But I'm going to show you how, in particular, I like to trade them and the kind of little rules and caveats that I have for myself. So when it comes to pin bars, in the markets, okay, and this is my view, this is my particular, when I see the wicks, the rejection tails, I see that as the most likely indication of where let's say the biggest predators are lurking, the biggest operators. And what they're doing is they're showing rejection of a particular area, direction, or even narrative. And so, as a private retail trader, I think it's kind of pointless to try and fight candles. What I want to do is work with them to show me the likely short-term direction. So there's a couple of examples here, but the main ones are at the end. But you can see here, price had dropped strongly. Then basically here, here was a pin bar. And price basically pushed its way up for the next few particular sessions. And the same here, okay, although I wouldn't necessarily consider that to be a considerably strong one. But more importantly, when I see price come down here, this is to the 200 period moving average, and we see 1, 2, 3 kind of pin bars there, bullish pin bars. What that's telling me is that there are buyers there. It's like a big predator is just taking a big bite, okay, big chunk. And what I'm expecting is that the likelihood of the higher probability of the direction is to the upside. The wicks, remember, pointing the wrong way in the wrong direction. So Cathy says, which time frame will you use for your pin bar? I will actually use them across all time frames, but what I'm going to do is I'm just going to show a few examples later on from different time frames, different asset classes, just so that hopefully you can help to get an understanding of of where and how best to use them. But that's a good question, and I will cover it as we go through. Yeah, you're very welcome, Cathy. I hope I pronounced your name correctly there. If I didn't, I do apologise. So there we go. As I said, it's a rejection. Okay, it's a rejection of a particular area or direction, and I can utilize that, to help me with my own trading decisions. So as we said, it should have the open and close, okay, within the range, okay, in the body of the preceding bar. The wick should be 2 to 3 times the length of the body. We want to see a long nose protruding, and the better pin bars, they stick out. They are very obvious, and that's what we're particularly looking to utilize in our own trading decisions. So here are some examples of bullish pin bars, and so what I'm expecting is that I would be expecting bullish pin bars after perhaps price has made a move down, whether that's the trend or whether that's a pullback. But what I'd be expecting to see is price opens here, price pushes down during the session, and basically the bulls step in and buy it all the way up and close. Okay, closes on its highs. So I'm expecting the direction is going to be bullish afterwards for the next period. Here, even this candle, even though it has a bearish close, I'm happy with it because we have, the wick is 2 to 3 times. We've got a small body at the top end of the candle, so I'm very happy that is representing, it's the bulls that are being controlled, and it's a higher probability of a move higher in the next period. Some people might actually call this. Some people would call that maybe a doji, maybe something like a dragonfly doji or a gravestone doji, so more dragonfly doji. But the narrative is the same, namely that we've opened, we've pushed all the way down, and then basically been sort of pushed all the way back up. And it's just showing us the bulls are likely to be in control. The reason I have a question mark here, and the reason why I give it a tick, is that, of course, what we can see is that the wick here isn't 2 to 3 times the size of the body. But once again, I want you to think about the psychology of what's gone on in the market. Namely, prices opened here, prices pushed all the way down before prices reversed. Bulls have stepped in and they've pushed price all the way past the opening, all the way up, and it has closed right on its highs. It is a very bullish. Okay, that is a bullish candle, and so that's my caveat to that, where I'd be happy to utilize that. Whereas here, I wouldn't. Okay, because think about what's gone on in terms of psychology. The market will have opened here, price has pushed all the way down, and the bulls have stepped in, and they have started buying it up, but they have only been able to buy it about half of the way up. So to me, the bulls haven't fully wrestled control of the market, whereas in this example, they most certainly have. Here, they haven't. The bears, I'd say, are still in control. So for me, that would not be a good example to trade with. And on the flip side, these are bearish pin bars, okay? So this is what I would expect after prices moved up, whether we've been in a longer term trend, whether we've been in a pullback, etc. And what we'd be looking for is that in this particular case, price opens here, it pushes up, the bears step in and they sell so strongly that it push price all the way down past the opening, and it closes on the lows. Okay, so we'd be expecting the higher probability move is to the downside. Same here, even though it might have a bullish close, it's a very small body at the bottom of the candle. There's a good size wick there. Okay, so I'd still be saying that the bears are in control, and the higher probability move is downwards. Especially this is more like a doji. The same here, because of the psychology. I'm thinking the market is open here. Price did rally up during the sort of period during the day. And then basically the bears stepped in and they sold it. Not only did they sold it so strongly, okay, that it went past the open all the way down and closed right on its lows. There was a higher probability of price moving downwards, okay, and that's what we're particularly looking for. Whereas this is a no-no, because if you think about it, price has opened here, price has pushed up during the day, the bears have stepped in and they've basically pushed it down, but it is still closed. It's closed higher than it opened. Okay, to me, that is not the bears in control. The bulls are still in control there. So hence why I would be ignoring that as an option. So what we want to look at is, well, what are the safest ways for us to trade pin bars? What are the ways that we want to look at and be able to utilize? So lots of people will try and use pin bars to signify the end of a trend. Whereas possible for myself, and this is, I said, this is me sharing my experience, is that where possible, what I like to use pin bars for is when I have an identified trend. Okay, in this particular case, the trend was down, and we'll see more examples. And what actually we're looking at is prices on a pullback and prices using the pin bar here to effectively bounce off a level of support resistance. In this case, it's dynamic resistance in the form of the 20 period moving average, which is always a blue one on my charts. And we can see price pulls back, price puts in a very strong bearish pin bar, and hopefully you can see the price basically, moves its way down. Now, let me just clear these drawings, make it a little bit easier. There'll be lots of people who try and use things like this pin bar here to signify the end of the trend. And we can see price does pick up a little bit, doesn't it? But then you can see the downtrend is still dominant. Okay, the bears are still in control. Okay, and as I said, I don't particularly want to fight that. So where possible, okay, I'd like to trade them within an already identified trend on a pullback off a support resistance level, and quite often it's a dynamic support resistance level, like a moving average. And I'll show you some examples of that in a few moments' time. So I thought this would be a good time also for us to have a chat. Well, why do some people have challenges with pin bars? All right, why do some people don't like them? Why do they struggle with them? Quite often what I find is with new traders that they can ultimately have challenges with trying to trade pin bars. And my view is that the reason they may have a challenge is because they fail to understand the CPT, the context, the pattern, and the trigger, and in particular, the context. If you look at a chart, and it could be a 5-minute chart, it could be a monthly chart, you will find lots of pin bars on there. Okay, lots of pin bars. And you could trade every single one of them, and you'd probably find that you might have a 50-50 hit rate in terms of being right and being wrong. There are an awful lot of them on there. What is important, I believe, and is easier once you've got some experience of analyzing market, is actually understanding where that pin bar turns up, okay, in terms of the overall context. And as I was just saying in the previous slide, for me, okay, what I'm looking for, the context for me for when I want to trade a pin bar, is that it is a pullback in a very clear trend, whether it be uptrend or downtrend. And what I'm seeing is that the price is printing a pin bar as it bounces is off a level of support or resistance, which might be, very often is, a moving average, or it could be a big round number. So in this particular case, as I was saying here, this was we were already in a downtrend, price pulled back to the 20 period moving average, prints a bearish pin bar, and that to me is a very clear pattern. And then it's a case of, well, actually, how do I enter? What is my enter? My enter would either be on the break of a candle, or, and I'll share a little bit in terms of an advanced way, is a pullback of the actual pin bar candle. But we'll talk about that in a few slides times. So in terms of, we understand the context, we've identified a pattern, and now we're looking, well, what's our trigger? How do we enter? What I normally suggest is, for most new traders, is that whilst there are several ways to enter based on your risk profile and your experience, the sort of standard safest way is for a long candle is to buy the break of the high of the candle for a long trade. All right, with your stop loss below the low of the candle. So in this particular case, price had been in an uptrend, price pulls back to the 20 period moving average, and then what happens is it prints a nice bullish pin bar. So what we'd be looking to do is we'd be looking to have our entry, our trigger, okay, just above the high of the candle. So depending upon what time frame. So I would normally say for if you're trading, like, let's say on swing trading, so 4-hour, daily, weekly candles, what I would normally say for a long candle, I'd be saying, I would have my entry order normally between 4 to 10 pips above. Okay, so that's where I'd have for my entry on a swing trade, and my stop loss would once again also be about 4 to 10 pips beneath the low of the candle. And the reason I say 4 to 10 is sometimes you have to just understand the spread. So, if you're trading one of the majors, like one of the dollar majors, you might have very tight spreads. You might be anywhere between half a pip to 2 pips. Or if you're trading in, let's say, an exotic FX pair, well, the spread might be bigger these days and such. So you just need to understand the context, okay? And equally, the stop loss, whilst I would normally have it somewhere between 4 to 10 pips beneath the low, that will depend also on my analysis of the markets. It could be a little bit further if I'm at a particular level, or if I see that the price could go a little bit lower. My case is a case of, don't be stupid. Don't try and squeeze blood out of a stone. It's a case of just recognizing, A, it's important to have a stop loss, and B, just to have it in a normal, natural place. And so that is let's clear this off. So, that would be how I would describe it as, just the standard way, okay? Buy the break with stop loss beneath the low. And as I said, safest entry and stop loss, but very often, depending upon the size of the pin bar, it may require a strong move to ensure a good return on your risk. Now, in this particular case, that is because we're in a strong uptrend. We've had a small pullback, and the trend has continued strongly. Sometimes that will happen. Sometimes that will not happen. We don't know. And in this particular case, we actually get sort of, the next day we get more confirmation when it prints another pin bar. You might also say, well, Paul, that was a pin bar as well. And I wouldn't necessarily fight you on that. But what I'm interested in, we've been in an uptrend. Context, price has pulled back, okay, to a level of support, dynamic support from the 20-period moving average. It is then printed, a bullish pin bar pattern. All right, so we've got the context, we've got the pattern, and the trigger is, for the safest way, is to basically buy when price trades through the high of the candle with our stop loss beneath the low. And for the sort of, let's say, advanced traders, you can also have kind of a much more aggressive entry, okay, which you'll hear sometimes me call the 50 PBE. And what does that mean? Well, that just means it's a 50% pullback entry. And so what I'm doing here is, as I said, normally the safe standard way is to wait for price to break through the highs. But what I might well do is I might actually have my entry much deeper into the candle, somewhere around the kind of 50%. Depends upon the size of the candle, the spreads, etc. But as a general rule, half the way through with my stop loss in the same place. The difference this makes is that, of course, this means my trade risk, the number of points between my entry and my exit, is much smaller. So my possibility to achieve my targets is, it's easier to improve my target because of my trade risk is smaller. However, what you have to also recognize is that, there is no reward without risk. Sometimes what that can mean is that, you might be entered here, as the next day price drops down, but price could, of course, continue all the way down, and not trigger. Whereas if you'd had the normal standard entry, you may not have been triggered in there. So you just have to recognize that. Sometimes also the trend is so strong that actually it doesn't pull back 50%, okay, before it launches itself off, because the trend is so strong. So there is no perfection, ladies and gentlemen. All right, there is no perfection. It is about understanding your own risk profile, having awareness of how you particularly like to trade. But generally, what I will quite often do on good trends is, as I said, might have an entry deeper into the candle with my stop loss in the same place, and then utilize even just the Fibonacci 261 extension, okay, of this range. That can provide me with about a plus 2.3 to about 3.5 R trade, okay, in terms of reward to risk, and that's very good. But we also have to realize is that, that your hit rate might be lower, but because you've got a really good reward to risk, that means that you have a positive expectancy. So I said that's just let's say the advanced aggressive entry for those of you who've got a little bit of experience. There's absolutely nothing wrong with just the standard entry and stop loss and just having a target there, and asymmetric, 2-to-1 target. That's absolutely fine. Okay, absolutely fine to begin with as a trader. So let's have a look at a few final points. Remember what I was saying is that pin bars for me they're an indicator of where the biggest predators are probably lurking, because they show rejection of a particular area direction. In that case, as I said, price has been drifting all its way down until it hit the moving average, and then bosh, we had all those wicks before we launched ourselves higher. So my view would be, as a private trader, it's pointless to try and fight them, especially on the longer time frames. Okay, what's better to do is to work with them to show you the likely short-term direction. Ideally, look to trade with this trend. That's what we're looking to. Don't fight the market. Okay, I mean, well, you're welcome to fight the market, but the likelihood is that you'll probably be the loser. What we want to do is think of yourself as like a surfer, right? A surfer doesn't try and surf every single wave. What they try and do is find the best waves for them to surf, so they can get the longest run on their surfboard. And this is the same with trading, okay, using pin bars as a pullback in the direction of the dominant trend. That's what we're particularly looking for, okay? We're looking to just basically surf those waves where possible. So I've got a few examples here. They're quite big examples because I wanted just to basically show different examples on different time frames. So, what we have here, this is actually something a bit different. This is wheat, okay, and this is the weekly chart from this year. And you can probably see here. We've been in quite a strong downtrend for a few months, and that downtrend was ended by a bullish pin bar there. Okay, you can see it stands out very clearly. And as I said, some people will have happily traded that as an end of trend. And as you can see, yes, it did move quite significantly higher. Whereas for me, as I said, personally, I like to basically identify what the dominant trend is. Price has been beneath the 20 and the 50 period moving average. We can see price pulls back to the red 50 period moving average and puts in a engulfing candle, which is ended by a pin bar. But then price pulls back here, okay, and this candle here is it is a bearish pin bar. Price tries to push up above the 50, but it can't, and it falls all the way back down. Okay, it finds all the way back. Let's just clear the drawings. It falls all the way back down and prints, a very significant, bearish pin bar. Now, to be fair, that pin bar is bigger than I would normally like. I just wanted to show some examples that people here today could see very clearly the example. And what we can see is that if you'd had just the standard entry, okay, just shorting beneath the break of it, okay, we can see that the trade has moved down nicely. And here, had you had a 50% entry, remember what I was saying is that sometimes the trend is so strong you don't get triggered in, and so that's the downside, okay, of trying to use the 50% aggressive entry. As I said, there is no perfection in trading. It's about which is the way that I could follow this for 20, 50, 100, 200 trades. But that was an recent example in wheat on the weekly chart. Another one here, this is a bit soft agris, okay, going to some of the corn weekly. And price, as I said, price, never moves in a straight line. Price was moving its way down. We can see that the last time it come up to the 50 once again, it had bounced off with an engulfing candle, and then price pulled its way back there, didn't it? Pulled its way back to the 50 period moving average. What did it print there? Again, this was once again, this is a weekly chart, but you'll see them across all time frames. This was a weekly chart, which was also part of a flag pattern, but what we had there was a very, very strong, very strong bearish pin bar. And once again, and the standard entry would be, you would be looking to sort of have an entry to short there, okay, beneath the low of the candle when price breaks it, with your stop loss above the high, and you can see that really did, fall quite significantly. Once again, as I said, if you'd have used the 50% pullback, okay, for price to pull back into it, that doesn't get triggered, does it? And as I said, that's, there is the aggressive 50% pullback entry can work very well, but there are times when you're in a strong trend and it just won't trigger anyway. So you just have to build that into your plan. You just have to be aware of that. There is no perfection. It is about working with what you have to give yourself the best opportunities. But that is, as I said, that's the corn weekly chart. Okay, that was quite a significant drop, as you can see, over the a couple of weeks back. And this was one, just looking to set up at the moment that was of interest. This is actually gasoline. It's on the weekly chart. As I said, they can work across all time frames, and I appreciate we had the question earlier from earlier on in the session. I tend to, as I said, do an awful lot of work on the sort of the weekly charts, 4-hourly charts. I find them fabulous, but I will equally happily trade them on 5-minute charts as well. But here are just examples we can see on the weekly chart whereby prices for the whole year, price has been kind of grinding its way up. Not in a super strong trend. It's more like being in a bit of a channel, really. But what we've seen is prices have fallen back to the 50-period moving average, which is now starting to turn upwards. And what we've seen the last couple of weeks here is a couple of bullish pin bars, haven't we? So that would give us an indication that, well, we think that there's a good high probability that price may well sort of drift its way back up towards those kind of those earlier highs in the year, etc. And that is a trading opportunity. So that might be one to watch, to add to your watch list, and keep an eye on as we see how that plays out over the next few weeks. So what we'll do is we'll switch across to the live charts in a moment. Have a little look at how markets are starting to set up. But just to conclude for the slides, namely in terms of, well, Money Market Matters, we're going to, it's returned, for 2023, and it's going to be an interesting year in markets. I believe that it's going to be an eventful last few months as we run towards the end of 2023, and I hope that you'll join us to enjoy that journey. Hopefully, as you've seen, if you're completely new to trading, you're recognizing that pin bars are a powerful candlestick signal, and they are deemed rejections when that candle forms a strong wick. And wick rejections are formed by an extreme shift in bias and sentiment. And we attribute that wick with a bit of volatility and a higher probability of a move in the opposite direction. We prefer to focus on them in trading as part of a pullback in a trend. We can add them to our price action trading plan, and we're looking for those price action pin bar triggers at significant price levels. Remember what I was saying. It's about understanding the context, the pattern, and the trigger. That's what you want to understand: context, pattern, and trigger. It allows us to build a very simple price action trading plan. I know people who, clients of mine who will literally just trade pin bars off weekly moving averages, just do a little bit of work at the weekend, trade that way, and they're very happy to do that. And that's a way for them to work. Okay, and as I said, keeping it nice and simple is normally a good way to operate. So, with that in mind, why don't we have a little look at the live markets and see what's been going on there? Before we do, just a reminder that we're back, and we're next Monday, 11th September, 2 o'clock London time. Monday Market Matters, we're back, and what we'll focus on there is how to intraday trade European indices. So lots of people would like to sort of engage with different types of markets, and in this session we'll just be sharing a bit of experience, a bit of knowledge and understanding on how to engage with European indices on an intraday basis, part of which may include how to utilize things like pin bars in such environments. So be sure to join us. You can see there's the QR code there on the slide. You can get your phone open, you can basically take a photo of that, get yourself signed up for that particular session, and as I said, I hope you'll join us for that. So let's switch across to the live markets. Okay, if have any particular questions or comments or thoughts, then you can, as always, contact ActivTrades here. You've got the English desk number 0207 6500 567, or email us englishdesk@activetrades.com. Maybe you've got some questions or thoughts, maybe you've got some feedback, maybe you've got some topics you'd like to see me cover in future sessions. I'm very happy to take that feedback on board. We want these sessions to be, beneficial and useful to you. So by all means, feel free to get in touch with your account representative there. So if you'll just bear with us a moment, what we'll do is we'll switch across to the ActivTrades platform and have a little look at what's going on with the markets, having opened, about 11 minutes ago. So just bear with us one moment. Okay. Super. So I'm hoping that you can still hear me. I'm hoping that you can see me. What I have is the ActivTrades MetaTrader platform up. Hope you can see that. Okay. Hope that you're able to see that on the on your view and hear me as well. What I've got here is let's just get the old drawing tool up again here. That'll help us. So this is actually the US dollar here. Okay, so I have a profile for the US dollar here. So that might be a good starting place for us to have a little look at in terms of what's been going on, and also are there any pin bars showing up? Okay, what can we learn? What can we learn from that? So, as always, I like to start with the dollar index. Okay, the dollar index here. Let's just go for the monthly chart. Now, here's an interesting thing. This is the monthly chart here, and bang. You can see that we had a very strong trend there for about a year or so, and now we fell back, didn't we? And then for a good part of this year. A good part of this is 2023 here. What happened is, we were for the most part just literally just going sideways until just sort of July time here. Hopefully, you can see that what actually price did there is price dropped its way. And where did it drop its way down to? The big round number of 100 on dollar index. And what did it print there? It printed a pin bar there, didn't it? And so it's no surprise to see that the next month that actually price rallied that next month. Okay, throughout August, that's what we're seeing there. And if we just go down a time frame, what we should be able to see is that here we go. Just to zoom out, is that as I said, price hit that 100 level, didn't it? And then it basically for the last 6 weeks or so, you can see it's just strengthened its way. And look where we are now. We're at that weekly 50 period moving average. It's printing us a pin bar, okay, but this is more like what we would call a hanging man, okay. It's more like a bit of a reversal pattern, because actually what we'd expect to see at the end of a bit of an uptrend, I'd be wanting to see something like a bearish pin bar like here. Hopefully maybe you can see that bearish pin bar. Price had rallied up, it hit the moving averages, and then what did it do? It rolled over and fell away for a good few weeks, and that's what we're looking here. So I'm looking here to see how is that actually going to play out. Okay, what we had was the daily chart has just basically been on a strong rally, and now we're looking to see, well, okay, it's working its way, but there's no real kind of no real sort of strong, very clear pin bars there, okay, over the last day or two to show us what's price is likely to do. If I look even just looking at the lower time frames, okay, yeah, it's just waiting, okay, it's waiting to make its decision. But because of that, we can sort of look at, well, actually, how is that implying against the dollar, against other currencies? So in this case, let's have a little look at the dollar against the Swiss franc. Let's have a look. Maybe they're monthly. No, we can have a little look on the weekly charts here. So you have to excuse my charts are a bit scruffy. It's just using it for my own trading. But at the end of last year, what we happened here, just hopefully you can try. What we happened here at the end of last year is we had what was known as a double top, or a 1, 2, 3 top, and the second leg of it was a very clear bearish pin bar. Now, as I said, some people will use pin bars to end a trend after it. Personally, that's not my way, but I will sit up and take notice of big, strong ends to trends. And actually, what we saw here is price fell down, didn't it, for about the next 3 months, and then we put in a pin bar here. Price rallied a little bit there, okay, before it continued its way down. But what we saw was that what we've seen here is that basically once again we had printed a couple of pin bars there, okay, at the end of that downtrend, and we saw that prices just worked its way up after that for that next kind of 6 weeks or so. So, so some people will use pin bars for the end of a trend, okay, but for myself, where the trade was here for me is here, is that namely we were already in a strong downtrend. Price had pulled back, okay, price put in a pin bar, even though it's a bullish close, it's still the wicks to the upside, okay, it's a bearish pin bar, it's like a flag pattern, and then we can see the price dropped away, and that for me is the trend. Remember what I was saying is that we don't want to fight the trend, we don't want to fight the market. What we want to do is find ways where we can surf the market, and that's actually what we're really particularly interested in. There's other big examples on this in terms of, here we go, the Australian dollar against the US dollar on the monthly. So as we just looked there, we can see that the US dollar was strengthening, okay, over the last 6 weeks or so. This is the monthly chart of the Australian dollar against the US dollar. Maybe what you can see here is, let's just show this, is that actually, price here in an uptrend, it printed a double top there, but the two legs of the double top were both pin bars, weren't they? Both bearish pin bars. Now, as I said, I don't particularly like to use them as overall as just on their own as the end of a trend, but they are valid, and we can see price moved its way down, and actually, bang, it actually, you might say that was a pin bar pull before it moved up. The thing is, what you've got here is pin bars here and pin bars there, okay, and this is one of the reasons why personally I prefer to utilize them at the end of a pullback in a run of a trend, rather than trying to pick the exact bottom. Because if you'd have bought that one, well, that failed. If you'd have bought that one, then it failed, okay. And if you'd have bought that one, yes, it would have worked, okay. But you've had two failing trades beforehand, okay. You're trying to pick the bottom. Whereas for me, price was basically continuing its downtrend here. It pushed its way up to the monthly 20, and what we had here in July was this is an inside bar. It's also a bearish pin bar. So I'm expecting, because we're seeing dollar strength, I'm already expecting price to sort of move to the lower side. Okay, I'm expecting price to drop from there. That's what I'm working with. And actually, let me just clear here. That is actually what we see happening. Okay, that's actually what we see happening, is that price actually just drops on the weekly chart. Okay, we can see that happening, and then bang on the daily chart as well. Okay, on the daily chart, basically price had moved, and we can see where prices tried to come back and hit pin bars on its way down. Okay, but what we're looking at is that trend was, come out of the monthly candle and finding a way to work with that, all right, and to utilize that information to give us an idea that we're actually trading with the pullback in the trend. And the same thing happened with the New Zealand dollar, okay, having sort of fallen away, pulls back, and actually what we see here is it pulls back to the 20 period moving average and prints a pin bar, which then basically price sort of continues to fall its way to follow its way through. Okay, so you can see that even on the higher time frame, you can work it, so invariably it will work with us. Okay, we can work with it in terms of utilizing it as a way and a means to identify an opportunity to sort of get on board a trend and trade the best trend. While we're here, if we look at gold, okay, as I said, some people will trade them at the end of trends. That wouldn't be my way, but I certainly sit up and take notice. And this is the monthly chart in gold. And when price got up to big round number 2,000, we can see that it reversed its way off it. When it came back to here, okay, earlier in this year, what did it do when it got to 2,000? It printed, okay, bearish pin bars, and so price is going a little bit sideways there at the moment. So, but when you see, as I said, big round pin bars at significant levels, their context, that is when you start to get that's when we start to get interested. Context, pattern, trigger, that's what we're particularly that's what we're particularly looking for. And what was more examples of it was that price had been in a downtrend on the weekly chart in gold, okay, and then we get one, we get two, and we get three pin bars there, triple bottom pin bars before actually price works its way up. It pulls back, puts in another pin bar, and then it works its way up, comes back, puts in another pin bar before it rallies its way up to 2000, and then at 2000, what does it do? It prints quite a few pin bars there, doesn't it? There's 3 or 4 there. Okay, sort of giving us an example that the bears are taking control, and what happens is we see price moving down in its way on its way down there. Okay, and that's what we're always particularly looking at. All right, just seeing when price is at a point where it's going to have to make a decision. That's what we're looking to see, what is the price action there. In this particular case, there was lots of pin bars there, all giving us an interesting example that the price is more likely to head downwards, even though there's lots of wicks pointing to the upside. The real direction is more likely to be the downside, and that's what we've seen there. Okay, so a little bit of pin bar insight there. Okay, but let's have a look at the US indices. Okay, and how they have opened this week and how they're looking to shape up. So I have just an indices. Let's just put these all on the. Maybe we can put these all on the same thing. Just to plus. Okay. Okay, so just have a look at just quickly looking at that. Yep, that's just. Okay, so what we have seen is, if I just let's go to the S&P 500. All right, on the weekly chart here. What we've looked at here is the tool. Boom, boom, boom. Is that price? Started the year. It rose. It pulled back. The pullback was ended at the moving averages with a pin bar before price started to move up again. And what we can see is, we had bullish pin bar here, bullish pin bar here, bullish pin bar here. Okay, being supported off the moving averages underneath them before price started to rally all of its way up there. And then we've fallen back a bit, and we've risen, but there's not necessarily on the kind of weekly chart being the clear example of how we would get in there on the weekly chart. But when we start to look at the daily chart, that's where we start to get a little bit interested. Okay, and here we go. Yeah, start to look at how on the sort of the 4-hourly chart, how price is just making that move up there. It's been bullish there for 2 weeks now. Okay, even though we had a little bit of a pullback, we've just effectively just done our kind of done our legs here. This is double bottom, pushed away up, and now we're here on the daily chart. If we look at the daily chart, we've printed one small bearish pin bar and then another bigger bearish pin bar, and I'll be interested to see how price action acts today. Okay, to see whether that is whether that price is going to drop from there. Okay, or whether we'll continue to push higher. I'll be wanting to have a little look at that. So in the meantime, what I'll be saying is that, here we go. This is a good example of the kind of pin bar that I would particularly like to be trading, okay, to be focusing on. And what I would be suggesting for new traders is that, once you've established what a trend is, well, then what we're looking for is, remember what I was saying, is the context. Okay, we're in an uptrend. So, the price is an uptrend. It pulls back to the 20-period moving average. It prints a pin bar, and price shoots all its way off there. Okay, price basically makes a move. It pulls back once again to the 20-period moving average, and what it does is it prints, a pin bar, bullish pin bar. Price pushes lower than the recent lows, and then rallies up high, closes above the 20, and that is your trade. With a sort of standard entry, standard stop loss, and just allowing that trade running to that kind of nearest level until you get that kind of pin bar engulfing candle key reversal against you. But that is still the opportunity for you to take that particular trade, and that's what we're really looking for. Okay, ideally, as I said, we want to trade with the trend. We don't want to particularly fight it. So let's have a little look on an intraday basis for how we have opened the markets. Okay, let's have a little look here. Just drawing my particular interests and levels there, but I'm just looking to see what's the particular areas that price might move towards. Just you can see that Nasdaq's already breaking out of that. Bang, S&P's there. Just okay. See the Russell's already starting to fall down. So I'm just looking at, interestingly, what we've got here, and I'm always, those of you who joined us in the past, what I'm always interested in is, I want to see correlation between the moving averages. I want to see them all moving at the same time and place, but you can see the Russell is very clearly moving down, isn't it? The Dow is clearly is kind of moving down. The Nasdaq's moving up, and well, the S&P is just going sideways, isn't it? The S&P doesn't know what it wants to do at the moment, and so this is why kind of Monday, the first part of Monday on the open session, as I said, I normally kind of would leave it at least 15 to 20 minutes just to allow markets just to settle down, just to see if there is going to be a correlation in terms of the way they particularly move, because when they're all moving in different directions, invariably that's when I sort of normally sit and wait. Okay, wait for it to make a decision on where what it wants to do and where it wants to go. I'm just going to have a little look, maybe a little bit lower on the S&P 500 because the price for today had mostly been working its way up, and then it pulled back and put in a pin bar. But it's a very, very slow, dull opening. Okay, which is not like the S&P, especially if the others are sort of moving fast as well. But he said what we have done is what I'm seeing here. Okay, is that price zigging down, price pulls back up to the 50 period moving average, which is pointing down. It actually prints a pin bar there, doesn't it? And it's only because, as I said, I tend to avoid just as the market opens. That's what this green box is. I just generally let the market do its thing, because actually what we can see is even though you've got this pin bar here, a bearish pin bar, the next candle is kind of a bullish pin bar, and you've kind of got a scrappy, not a very good kind of rejection candle. Hence why, as hopefully you can see there at the moment, is pretty scrappy. It's pretty full on. So I normally just, as I said, just tend to leave the last 15 to 20 minutes just play out, just let that do its thing whilst I wait to see what's actually going on there. Let's see. Nasdaq has trended on an intraday basis today. It's pulled back. It's bounced off the 20. All right, with the pin bars. Normally that would be an interesting move, but the reason I wouldn't have taken that is just because you're just right in front of the US Open. All right, we don't know which way that US Open will go, so it's a case of just waiting to see. But you can see that kind of the trend is up. The price pulls back to the moving average, and a couple of pin bars there, and it bounces nicely, doesn't it? But as I said, and if we go down to the 15-minute chart, it just basically looks even sweeter. We've got the 50-period moving average angling up, working up, price falls way back to it, and you can see that you've got two bullish pin bars there before price rallies its way up there. And any other time of the day, that is actually, that is a picture perfect pin bar trade. Okay, but because we know that this is, literally, that's a 15-minute candle. So it closes at, what would be 9:15 New York time. We know the market opens at 9:30. We don't open in front of that. Okay, it's worked well, but you wouldn't, it wouldn't be the trade you'd be looking to take based upon the timings that we had with it, with that. But in terms of a normal play, which is in a trend, price pulls back. That pullback pulls back to a moving average, which puts in a moving pin bar. So you've got the context that you're in an uptrend, prices pulled back. Then we get the pattern, which is our, in this case, it's a double pin bar, and then our trigger would be, of course, looking at, normal standard trigger would be looking to go long above the highs, okay, of those two pin bars, with your stop loss beneath the lows of it, okay, and that being the trade. And even just a move to the high of the day would be enough to sort of generate 2 to 1 reward. So there's a kind of as a nice way for us to finish, just looking at that in terms of a pin bar trade there, okay, as part of the start of the US markets. Okay, ladies and gentlemen, unfortunately, we're going to have to end it there. As always, time flies when you're having fun. I hope that's just given you a little bit of help, a little bit of insight. I hope that has just given you just a bit more information on how to how to identify pin bars, and also to understand that it's all about the CPT, the context, the pattern, the trigger. Those are the important things, okay, to get in place. Not just trading every single pin bar that you see in a chart, because as you can just see in there, there's lots of them on there. It's about understanding the context, the pattern, and the trigger, and that's the important thing. Until next time, I hope you have a fabulous trading week. And remember, we're back here Monday, 2 o'clock next week, talking about intraday trading European indices. Have a great trading session. I will speak to you soon, and trade well, everybody. Take care. Cheers.